The 60-40 rule says you should put 60% of your investment in stocks and 40% in bonds. But is the 60-40 portfolio dead? With inflation, rate hikes, and market uncertainty, it just might be. Hi, I'm Bergman, tax attorney and founder of IRA Financial. The classic 60-40 investment strategy has been a staple for decades, but in today's economy, it's struggling. Investors are looking for better diversification, higher returns, and more resilience. That's where alternative assets come in. The old 60-40 portfolio used to work because bonds would protect you when stocks dropped. But in 2022 and 2023, both stocks and bonds went down. That's why we've seen a rise in alternative assets popularity and what I called the modern alternative strategy, or the 60-40 flip. Instead of 60% stocks and 40% bonds, my approach focuses on 40% traditional assets like stocks, ETFs, mutual funds, and 60% in alternative assets like real estate, crypto, gold, private equity, and ideally through a self-directed IRA or solo 401k plan. This diversified mix gives you a hedge against inflation, access to high growth sectors, and consistent cash flow. Why does this approach potentially work better? Alternatives are less correlated to the stock market. You have more control over what you invest in, and you're not relying on Wall Street performance alone. How do you execute this approach with your alts? Well, you can start with opening a self-directed IRA or solo 401k plan. Allocate your contributions to your alternative asset investments. Follow IRS rules to keep your tax benefits intact. As an example, let's say you roll over $200,000 of your $333,000 in retirement savings into a self-directed IRA. You can then put $80,000 in index funds, $60,000 into a multifamily real estate syndication, $30,000 into a crypto fund, $20,000 as a private loan earning 10% interest, and $10,000 into physical gold. You're now shielded from single market risk and positioned for growth, income, and stability. If this type of modern investing approach sounds like a strategy you want to explore, schedule a call with our team. And don't forget to sign up for our newsletter so you can stay ahead of the curve.